and he sees nothing different. And suddenly it goes, brrr, 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 brrr. So he says, what is this terrible noise? And then I show him the pistons typing, putting the bids and offers in through the keyboard.
Wow.
Just like the rules say. He looks at me. I should have had a picture of his expression. Because he turned around, he walked away, we never heard of him again.
Well, hello, Mr. Peterffy. Thank you for coming on our channel. So nice to have you. I've worked for your firm and for you for, 13 years before leaving to do my own thing. And you've been a legend and a mentor of mine for many of those years. Welcome to our channel.
Hello, Emmet Peppers. It's a pleasure to be with you. Yes, I remember those 13 years warmly. You were our very best salesperson. And I'm really sorry that you left. I wish you had never bought Tesla so you wouldn't be so rich and you couldn't have afforded to leave.
Yeah. Yeah, I think I told you at dinner the other month that you do treat the employees very well, and if you hadn't compensated me well enough to buy Tesla, I never would have been able to leave.
Well, it's a sticky wicket. You never know how when you run a company whether you should pay a lot to the good people and then you risk them leaving, or you don't pay them a lot and then you risk them leaving for that. So I think I just pay them whatever I think they deserve.
Yeah, thank you. Appreciate that. And so just for our listeners who don't know, a little background, you're the chairman of Interactive Brokers. You founded it. Originally, it was Timber Hill, an options market maker. But to back up a little bit before that, your history is very a fascinating story. I mean, you moved over, you were born in Hungary. It was a socialist, communist country, right? And then at what age did you move to the United States? And
so I was 21 when I moved to the United States in 1965.
Okay. And did you know you had some I don't think you understood English very well at the time. Is that right? You didn't have much money?
I did not speak English at all, stupidly enough, because, we had to study Russian. And then I chose to try to study German because it seemed more likely that I could use that better than English, which was a stupid decision. So
well, anyway, here you are.
It is.
Yeah, somehow you learned English very well, and we're it's so when you moved over, there was interesting stories. I've heard a lot of your interviews. You kind of started out in a construction type job, is that right?
No. I did not start. There is so many false rumors, even in Wikipedia. I read with great astonishment that I went to some college that I never heard of.
All right. So how did you start out? Yeah.
The fact is that, when I came to America when I was 21, and I knew a little bit about, not a little bit, a lot. I knew quite a lot about surveying. So as a result, I went and got a job at a highway designing firm where I worked as a draftsman.
Okay.
And one day, and this was in 1966, the firm bought a computer, and after they got the computer, they discovered that nobody knew how to program it, and a computer is useless unless you can program it. So they looked around and they said, well, would anybody care to learn? And since I didn't speak English, I figured that, well, learning computer programming probably takes a lot less words than learning the language, so I can do it faster. And so I volunteered and I learned how to program that little computer. And then from then on, I went to various jobs as a programmer.
Hmm.
And so that's how it all started.
And how did you get involved in the financial world? You know, you had some jobs on trading
So
floors.
at one point, I worked as a programmer for a little firm that did consulting for Wall Street applications.
Mm-hmm.
And that's where I met the owner of Mokata Metals, who hired me, and I started working there in 1970.
Wow.
As a computer programmer.
Okay. And that was trading commodities on the trading floor, commodities trading floor.
Yes,
Is that right?
Mokata Metals was a precious metals trading firm owned by Henry Jarecki.
Okay. And then let's fast forward a little bit. So you had started your journey in finance that way, and somehow you got some idea to, you know, you encountered, you know, index options or stock options, and it sort of piqued your interest about how people were deciding how to buy and sell this stuff, right?
So no. One day early on, when I just
Mhm.
started working there, Henry Jarecki said to me, you know, there are these things called puts and calls
Mhm.
and explained to me what they were. And he said, people are buying them and selling them, but nobody knows really what they are worth. He said, if you could find a way to figure out how to price them, maybe we could make some money.
Mhm.
So I thought about it for about half an hour and decided that I had no immediate answer. So went back to work doing whatever I was doing, but going home on the subway and walking on the streets and going to sleep, I kept thinking about the problem and I just couldn't let it go. It would not leave me for a month. So I had a small computer at home, the same kind of computer that I started to work on at the highway firm. It was an Olivetti
Hmm.
computer, and I created a program to generate random numbers from which I used to create a price series. And on that price series, I would buy and sell puts and calls of various durations and all kinds of in and out of the money strikes. I summarized the outcomes and that way determined at what prices I would have to buy or sell those options to break even. And I did thousands of trades at various strike to market ratios and different durations.
Mhm.
Obviously, this would have been an impossible task without the computer, right? Then fitting a curve through the prices that appear to me to be the fair, so-called fair prices at which I wasn't making or losing money on balance. First, an up market option, and then options of same length with different strike to market ratios. I finally got a formula that utilized the normal table for options that were not at market. For options at market, it you didn't need a
Mhm.
distribution table. So anyway, after a while, I had that formula, and then I went to get actual market prices, and that took a long time to punch them into my machine and ran these programs through the actual market prices. And I discovered that actual market prices were not very different than the normally distributed prices. The difference was really that the peak was higher. In other words, in the actual market, prices don't move as much as the normal distribution says, and the distribution is somewhat narrower in the waist, and it then gets a wider tail. So they either don't move a lot or they move a lot.
I see.
So that's the interesting thing. So the little bit of move that is described by the normal distribution happens less often than in real life. Anyway, listeners who are interested in how this logic applies to option trading today should go to Probability Lab on the IBKR website, because here we show we show you the momentarily prevailing probability distribution as implied by real-time option prices as disseminated by the options exchanges on any underlying. We also give you the facility to move the distribution curve to a shape that you think would be more likely than the one implied, and we even give you the best possible option combinations to take advantage of the difference. This is a very cool thing. I'm really proud of having constructed it, and it's free at the Interactive Brokers website, and it is interactive in the sense that you can move around the distribution function and see how the resulting option prices would change.
Yeah, so Tomas, I think that's something that maybe today's market participants don't fully appreciate, is just, how far the information technology available to today's, participants has come. I mean, the fact that you can move around the implied probability distribution and say, I think as an investor, I have an edge because I know something that the market is not pricing in, gives a huge edge, as we've witnessed firsthand here, at our fund. But I'm curious, kind of, rolling the clock back to, several decades ago when you were kind of first experimenting with this and putting this into play. And I presume you were able to beat the market to some degree, but then at the same time, you also saw you were clearly a practitioner, whereas I think what became the dominant model of options pricing was Black-Scholes, which was like an academic model, which ended up winning the Nobel Prize. So how was it for you to kind of observe what you had built in practice, to come to be dominated by the Black-Scholes model, and then they had long-term capital management, which imploded and caused huge issues, which gets into what you were saying about fat tails.
Yeah. So we used the model for issuing silver and gold options, and we sold those to people, and we made a market in them. That's what we used the model for. And then when stock options became listed, first on the CBOE and later on the Amex, I really wanted to get into that business, and Jarecki did not want to do that. So after a while, I quit. I had $200,000 of savings, and in '77, and went on to the floor of the American Stock Exchange as a market maker. And every night at home, I would print out the option prices corresponding to different underlying prices for the following day, and I would take all those papers with me in my pockets, and that's how I traded, folding up these pieces of paper, and that's what I did. And it was a very profitable business. Nobody else, by the way, used any. Black-Scholes was out by that time, but nobody spoke about it, nobody used it, nobody even heard of it. As a matter of fact, I didn't learn about it until in the mid 80s. So, you know,
was it mostly a lack of knowledge and not a lack of like computational ability that was the main issue?
well, I mean, first of all, the people on the exchange, they took the view that they can watch the tape and they can see which way the market is about to move. And you know, much of the time they could, and they still today they can. So the fact that, you know, an option should be worth $3.30 or $3.60 didn't make that much of a difference from their point of view, right? So they didn't really care. They wanted to, you know, when they saw the market about to run up, they would buy it at whatever price it was at, and then 15 minutes later sell it out, right? That's what it was. That's what floor trading was about. And it still to a large extent is. I mean, there are people who are still trying to make a living that way. And I know several of them who are our customers who do that today. Mm-hmm. Because basically when we started Interactive Brokers much later in 93, we saw that you know, the exchanges will sooner or later go electronic, and we figured that all these people on the floors would need an electronic way to continue to make markets, so-called make markets, so really trade, mm-hmm. as they did on the floor. And so we figured that we create Interactive Brokers, and we create this electronic mechanism for them to continue to trade. And so that's why people who are trading back and forth in the course of the day, execution is incredibly important for them, the quality of execution, because and to pay very, very small commissions, because they basically have to be able to overcome the execution cost. So mm-hmm. when they take a guess, and they are generally, but not always right, they have to get enough of a movement to overcome the execution cost, mm-hmm. right?
Yeah. So when you founded Interactive Brokers in 1993, up to that point in the 80s and early 90s, it was the market making unit was called Timber Hill, I believe. And you built a group of traders that utilized a lot of your formulas, and you added to your technology. You were one of the first, I believe, to set up an electronic connection.
I wasn't one of the first. We were the first.
You were the first.
There was nobody around until Blair Hall started in 1998, I believe.
Wow. Yeah. So you were the first to have an electronic connection. And there's a story I've heard you tell about, you know, the regulators coming once and saying, it says in the book, like you have to type in the orders into the keyboard, and you, because you had spliced some wires and connected a computer directly to the exchange or terminal to put in orders. So tell us about that story, if you don't mind. You have, yeah.
So the way that story happened was, it was, I think, in 1985 when I had this program that would, you know, cycle through option prices that were prevailing on the floors, and come up with horizontal or vertical spreads that were mispriced. Mm-hmm. And so we would go down to the floor. We had some floor traders, employees, and we would point out which are these spreads that are mispriced, and we would send them in there, and they would you know, buy or sell those spreads. And so for that, we started out by punching in the prices, but we couldn't punch fast enough to keep them up to date all the time. So I finally called Quotron and said, hey, I want to buy these prices. I could pay a lot of money for them. Would you give me a wire instead of giving me this huge computer that was sitting in my office that was owned by Quotron? And they fed that computer by their wire, and the computer was then attached to Quotron-owned CRT devices on which we could see the prices.
Mhm.
And they said, well, we don't really sell that because we don't have the product. We don't know how. So we spliced the wire into the wire that was going into their computer, and we got that wire to go into our computer, and we figured out we wrote the program to figure out from the pulses how to translate them into bids and offers for options.
Mhm.
And so we had that in our computers, and now we were able to tell exactly what the prices were. Then from there, we went to create our own cathode ray tubes that we put down on the floors for our traders to see, and which showed our bids and offers for any option at any time. The problem was that it turned out that the exchanges said, well, you can use this, but you cannot keep it in the crowd. It has to be somewhere on the side so it doesn't disturb people. And so then we realized that the numbers were too small for people to be in the crowd and be able to read it. So we had to turn them into colored blocks. So we had the 10 digits. We had 10 different colors, and we showed colored blocks that showed our prices. So our traders in the crowd could always tell our bids and offers for the options they were trading. And we also were well, if you start making markets for options, you may as well make markets for stocks, because that's basically, you have a stock price based on which your options are based, and when you have positions, your prices get sort of distorted, so you need to trade the stock too. And so we had we became NASDAQ members, and we had the NASDAQ terminal, and we started to trade quite a lot. And one day, a fellow comes from NASDAQ. He was actually the vice chairman of NASDAQ. I think his name was Walsh. And he comes and he says, well, I came, you guys trading a lot. And so he expected to see 20 people on the terminals constantly making markets. So he comes in, and there's just 2 or 3 people sitting around. They are mostly writing computer code. Yeah. And he says, who is doing all this trading? So I point to the computer, and he just, he looks at it. He sort of looks, he walks around it, he looks left and right. And then he says, explain to me how you're doing this. So I explained to him. And he says, well, this is not going to work. I mean, the fact is that you cannot do that because you clearly have an advantage over other people who are sitting at the keyboard typing in their bids and offers. So I said, well, I mean, that's life. I mean, technology grows, and people who use the technology have an advantage originally until other people also use the technology. So he says, he leaves, and he calls me back, and he said, now look, here is the paragraph in the NASDAQ rule, which says that bids and offers must be keyed in through the keyboard. And you're not doing that. So I'll come back in a week. By that time, you will either key in your own bids and offers, or you will cease doing this business. So that was a real problem. So I got my people to build basically a pistons over the keyboard, and the pistons would type on the keys by hitting them, and but very quickly, right? Because computer drove the pistons, so they, you know, when we had something to type, it didn't go like bum 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 bum. It went brrr. And so the fellow shows up a week later, and he sees nothing different, and suddenly it goes brrr, 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 brrr. So he says, "What is this terrible noise?" And then I show him the you know, the pistons typing, putting the bids and offers in through the keyboard.
Wow.
Just like the rules say. He looks at me. I should have had a picture of his expression. Because he turned around, he walked away, we never heard of him again.
Wow, that's some project. I mean, you guys must have pulled a lot of all-nighters in that week to get that thing up and running on the fly like that.
Oh, early on we had a lot of all-nighters. Yes.
And how long did you have that set up? I mean, it seems like that was required as a technicality, but how long until the rules changed?
Eventually, so the problem was that it was very loud. So then we had to encase this thing, the whole keyboard with this thing in a plastic enclosure, so it wouldn't be so loud. Well, we had it for about 2 or 3 years. Then I think the NASDAQ relaxed the rules. So the next rule was that your computer could write the input, but you had to hit the enter button on the keyboard. So so people figured that they can put a toothpick in there. So the enter button was always pushed. So whenever a new trade was put on the screen, the enter immediately entered it.
Wow, crazy. That's one of my favorite stories I've heard you tell before. That's amazing. You have so many great stories. We can spend the whole time talking about some really cool stories, I'm sure. But if we fast forward to, 1993, you founded Interactive Brokers for, as a kind of a project to help displaced floor traders in the future. And later on, you go public as a company around the time I started working there. I think that was 2006 or 2007.
2007, right.
Yeah. And at that time, it was went public, I think, as Interactive Brokers Group, but it was still the market making unit, Timber Hill, and Interactive Brokers, the brokerage unit. And Timber Hill was like the biggest part of the revenue, but you had the foresight, I think, to know that the brokerage unit was going to be the bigger piece of the pie in due time, right? I mean, how did you kind of see that playing out so well? Like, how did you know that, this is the future?
I didn't know. I didn't know. I was just. So there came a time we had Timber Hill. So in the early 90s, the US markets were still open outcry up until 2000. Mm-hmm. So in the early 90s, actually, I think it was in 91, the Deutsche Terminbörse became electronic, and they started an options exchange. Mm-hmm. And I went over to Germany and I said, look, we have this completely automated system where we show bids and offers to our traders on the floors, and they just, make the markets, they yell out the markets that they see on our screen. As a matter of fact, anybody else can see our screen and they can see what our markets are and trade with us. But now that you have this electronic exchange, you would just like to pipe the bids and offers into the exchange, and that way you would have liquidity, because nobody was trading on these exchanges, because it would take forever to type in those bids and offers all the time as the stocks kept moving, right? Because you had to change the bids and offers of the options. So, and he said, well, okay, fine, you're on. And so that's what we did. We hooked up our system to their system, and we automatically piped in our bids and offers. And when we did a trade, we had to, well, initially, they didn't let us have the trade on the wire. They insisted on showing the trade on the screen. So we had to build a camera that was basically looking at the screen, and then we had to build a program that would translate the pixels and interpret the numbers. So that's how we automatically consume the trade into the system. And then, so that was Germany, and then the Swiss started, and then the French and the Spanish, and then Hong Kong started, and then Australia. So by 1993, we had a big network, international network, where we made automated markets. And then I went to the CBOE, and I said to Bill Brodsky, who was, the Chicago Merc, and I said to Bill Brodsky, who was at that time running the Chicago Merc, could you please allow us to have a handheld computer in the pit where we could show our markets, and any customer who would be hooked up to our system, they could put in their bids and offers, and our brokers would know whether a bid or offer belonged to Timber Hill or a customer, and they would just execute them. So he said, okay, and that's what then gave us the idea to start Timber Hill. And so it was basically the existence of this international network and our ability to electronically communicate into the Chicago Merc pit, where they traded the S&P futures. That's what basically started us off. And then on the exchanges, we still showed these color screens, although we were eventually able to replace this color screens with handheld screens, where traders could see our markets on the handheld device and trade from there.
Wow, so you had one of the first kind of computers, handheld computers, almost iPads, built to bring onto the trading floors back then. I understand
that was in '83. So,
okay.
In '83, that was early on. As I said, that we called onto the floor to tell our people about these spreads. And as a matter of fact, the specialists didn't very much like to do these spreads, because they soon realized that we were always right, and so they didn't want to do them. So I hired some very attractive women, and the specialists, I understood these specialists, and the women didn't really know what they were doing, but they, we would call them up, and we would tell them the spread, and they would walk up to the specialist and say, well, I'd like to do this, how about it? and the specialists, some of the time, they were willing. And on one day they said, well, this is not fair anymore, because you guys have all these computers, and you figure out where I'm mispriced, and that isn't right. So your traders, referring to the women. Actually, when they come into my pit, I should be able to look at them and say, okay, you make me a market on this option.
Mm-hmm.
And I said, oh, I'm in real trouble now. So that's when we designed these handheld computers that were basically, they looked like an iPad today, but they were much thicker and clumsier.
Mm-hmm.
But that's basically how they work.
Mm-hmm.
And so, that's what the women started to carry these handheld computers.
Yeah, I mean that's some incredible innovations that you guys, these stories are just incredible innovations. I mean, you've been at the forefront of so many things here. I mean, if we fast forward all the way, to today, I guess, in interactive brokers today, there's so many other stories we can go into. I wish we had, okay, but what do you think? I mean, there's so many things that have changed, and the world is so different now with high frequency trading taking over a lot of the liquidity responsibilities, I feel like. And you've commented on it in the past, numerous times about the concerns around that. What do you see as like the biggest risks to the overall market in today's world with technology?
I think that part of the problem is that things happen lightningly fast, so that people cannot interject themselves.
Mm-hmm.
So, say if the Fed came out today and instead of raising by half a point, they raised an entire point.
Mm-hmm.
Everybody would hit all the bids, right? And then there are momentum traders who jump on any momentum also automatically, and they would jump on it. So the market could fall a great, 10, 20, 30% in a wink, in the wink of an eye. And that would be a problem, right? So, and then, I remember that happening sometime in the early 2000s. Oh, and then there was the flash crash, right?
The flash crash. Yes.
The flash crash was a similar situation, right? So that is a problem. So that's why they put in the circuit breakers. So people have some, like, I think 5 minutes to reassess the situation. But there would be a lot of bad trades in spite of the circuit breakers. So basically, I think that one of the problems is with the high frequency traders you're asking, is that the high frequency traders buy up all the retail brokers' order flow, and therefore those retail orders don't hit the floors, and as a result, the liquidity on the floors has dried up. So all the electronic brokers other than interactive brokers, they sell their order flow to the high frequency traders. The high frequency traders execute the orders. The executions have to be within the displayed bid and offer on the exchanges, and they are. The issue, however, is that nobody goes to narrow those bids and offers because there is very little competition on the floor. So that is the problem. So what does interactive brokers do? We go to institutional brokers who are kind of sick of this very wide markets on the floors, and we tell them, okay, you put your buy or sell desire on any specific stock into our dark pool, and we will move your bids on offers along with the market, and whenever we get a retail buy or sell order, we immediately execute it against your bid or offer. So that way, both sides are happy. We can execute our retail flow on a tighter market, and the institution gets to trade with retail orders.
I mean, that's a serious risk. I think the flash crash, it could be, I think yesterday or the other day, there was just one in like some Norwegian or Finnish market or something. It was talked about on Bloomberg, and they're investigating it. So maybe we'll see more of these types of flash crashes going forward, and it'll cause panic. And like the high frequency trading firms.
Well, I hope not, because of the circuit breakers, right?
Yeah, that's true. Hopefully the circuit breakers work. I mean, they would work, but hopefully they prevent further panic when they open back up, and so forth. I think when we saw Russia had their own circuit breakers, and when they had their, when the initial invasion began, the Russian market, even despite their circuit breakers, it felt like it gapped down every time the circuit breaker, for them.
Yeah, it's cascades down. It's cascades when there are circuit breakers.
Yeah. And Interactive Brokers has an incredible automated liquidation technology that when I worked there in sales, some clients would complain about it, or prospects would complain, like, I heard you guys liquidate us automatically. Why should I use you, or something? But really it's a strength, because in a black swan event, like a flash crash, you don't know for sure the market's going to rebound right back up. Like, what if it keeps going down? Then Interactive
It's
Brokers.
Not only that, I also don't know for sure whether the fellow has the money to pay, or he doesn't, right? So we basically have to automatically liquidate. And I think by now more and more brokers are building similar facilities, because it would be a clear recipe for bankruptcy if brokers didn't have that.
Absolutely. I always pitched it, countered that it's a strength. Like, you're with the firm that's much safer to be with, because in the event of such a black swan crash, Interactive Brokers would be more likely to still be standing and wouldn't lose its own equity capital as much as the other brokers who haven't been able to do that.
Right.
So, I mean, what, speaking of like technology and, not only the risks, but in terms of like the innovation and what you look forward to, what do you think Interactive Brokers, is there any new technology or innovation that Interactive Brokers is working on that you are most excited about, or think is going to play a really big role in the future?
Well, you see, it's an interesting market, because competition among brokerage firms, of course, is very strong, right? Everybody has some electronic capacity to create new things. And but whenever we come up with something, it gets immediately copied. And the worst thing is, it doesn't even get attributed to us. So, for example, we started the fractional shares before everybody else did. But nevertheless, I keep reading in the paper that it is Schwab who started it. Then, other than Robinhood, who nobody used to think about early on, we also announced 0 commissions for those people who wanted it. Although we are convinced that the client is better off to pay our small commission and take advantage of our executions against institutional flow. But people who want 0 commissions are free to get 0 commissions, and then we sell their orders to market makers, just like other firms do. So given that this is the situation, namely when you say something, people copy it, I don't want to tell you anything that we're working on. So what we do is we keep things very close to our chest, and when it's ready, we announce it. So that's how we announced the impact trader, where you can put into our system the kinds of issues, ESG kinds of issues that you're focusing on or that you're not focusing on. And we can give you, a list of stocks that would satisfy your criteria. Other thing, we just released Global Trader, where the account application is much simpler than we don't ask you so many questions, assuming that all you want to do is just stock trades, quick stock trades. If you then want to upgrade and start wanting to trade other things, then we ask you whatever questions we required by the regulators to ask, and whatever capability we must assure that you have, knowledge and capability. For example, if you want to trade options, we must make sure that you have the understanding of options. And then we have, of course, a lot of things in the oven, but as I said, we are not revealing them up until we're ready to reveal it to the world at large.
Yeah, it seems that one of the themes of this conversation has just been how you've been at the forefront of innovation for decades now. One of the latest innovations that is maybe out of the oven now, so you're hopefully a little bit more free to talk about it, is trading in crypto. So this is something that has been in a regulatory kind of gray area for a while, but it seems to be here to stay, at least in some form or fashion. So can you walk us through kind of how the decision was made to introduce crypto trading to the platform, and kind of where you think the opportunities and risks are from here?
Yeah, so it was obvious that a lot of people were interested in crypto, so we had to do something. On the other hand, the regulations are extremely vague or non-existent, and we didn't want to have the risk of sticking our neck out either. So we finally decided that we can create a partnership with I suddenly don't remember.
Was it Paxos or something?
Paxos, yes. Paxos is a crypto exchange. So our customers can come onto our platform and basically trade on Paxos. So we are an introducing broker to Paxos, kind of an introducing broker. And the customers, we show the customers his assets, but the crypto assets actually are at Paxos. And that's disclosed throughout this situation. But the essence of it is that we have a much lower commission rate for cryptos than any other broker, including Coinbase. So our commission rates are only 40% of that of Coinbase. But nevertheless, we're not getting a heck of a lot of, we get trades from our existing customers, but there are very few customers who have come to us just because we have cryptos.
Yeah, I don't think enough clients appreciate the safety of Interactive Brokers' balance sheet either.
Yeah, but in that is true, but for crypto it doesn't apply, because as I said, the crypto is kept at Paxos, not Interactive Brokers.
See.
Right?
Yeah, I see. And I believe you still own the vast, what is it, 70 or 75% of Interactive Brokers Group?
Yeah,
somewhere
something
around
like that. Yeah.
Yeah. So much of your capital is tied up with Interactive Brokers. However, you do have views on the market, and I assume you have views on businesses or stocks. Do you, did you invest in any companies publicly outside of your holdings with Interactive Brokers? And you don't have to tell us, I don't want you to tell us specifically which ones necessarily, but what do you do to evaluate? If so, what do you do to evaluate what businesses you want to own or not, if you don't mind your thought process? I'm curious.
So I do not invest much in public equities. As you said, most of my assets are in Interactive Brokers shares, and that's as much public equity as,
Yeah.
as I care to have. But if I did, my favorite measure would be the PEG ratio, which is basically the growth rate divided by the PE ratio.
Mm.
So, because what you want is you want a relatively fast-growing company that is not overpriced, right? So then the PEG ratio basically gives you that. And we have a global stock screener. Suddenly, I don't remember what.
There's so many tools with Interactive Brokers.
What the actual tool is,
Yeah.
but
yeah.
But the global stock screener, basically, you can screen for stocks. You can compare stocks by groups, by industry, by geography, by size, and different currencies. So, you know, throughout the whole world, you can say that, well, I want to look at companies that are minimum $10 billion of market value, and they are saying the consumer sector, and we give it to you worldwide, all the companies that are in that sector, and we compare them for you by PEG ratio, so you can see which appears to be the best buy. Of course, the issue here is that the data is not always completely accurate, unfortunately. So, you know, it's good enough for a screener, but before you actually decide to buy the stock, we recommend that you go and look at the actual financials of the stock that you are about to buy. I also look at tangible book, because, you know, when you buy a company, what you are ultimately buying is the book value of some future time, right? So, you know, if the book value is very small today, then this company has to grow a heck of a lot faster than some other one whose book value is not so very far from the current market value. So, yes.
Yeah, those are great insights, and frankly, two financial metrics that we look at closely. You know, one of the things that we found, at least in evaluating companies like Tesla, you know, we're heavily in the high growth space. You know, we found that you need to kind of do your own evaluation of what you think the, you know, next 12 months earnings is going to look like, because a lot of times it's the analysts can be, you know, quite wrong. So if you kind of back test some of those PEG ratios, the results will look a lot different than, you know, if you're only using actuals, or if you're using kind of analyst estimates on a forward basis. But I think regardless, you know, that's a great, you know, metric to look at, and as a screening tool is super helpful.
Right. So, well, yes, the analysts can be wrong, but by and large, they tend to be right.
Yeah. Yeah.
On most
So
stocks.
instead,
On most stocks.
I would say to people that look at the analyst consensus, if you're looking at a large enough stock, it's usually pretty right. And if it's not right, there is no reason why you could come up with a better estimate that they had.
Yeah. Yeah.
Right.
That's where the opportunity is, I guess. Yeah.
Right.
So speaking of, you know, much of our audience is huge Tesla and Elon, you know, fans, as we are, investors in Tesla. You've you know, commented on Tesla in the past here and that. You know, most people have thought they've been overvalued all this time. I mean, do you have a view on Tesla, the future, or what are your thoughts about Tesla and Elon, if you don't mind me asking?
So obviously, everybody must be extremely impressed by Elon Musk. He must be one of the smartest, most capable people around. And Tesla, the car, and Tesla, the company, are evidence of that. As far as Twitter, I think that's great news. But how to police content, political or otherwise, and how to automate that, which I assume he will want to automate it,
Yeah.
that will be a huge challenge. But I think it can be done, and if anybody can get it done well, he will get it done well. I think that he'll have to rely more on users to make sure that no groups totally isolate themselves on Twitter, because that's what happened. Basically, the political issues today come from the two sides being very isolated from each other, and that's not a good thing. But generally, Elon's stick figure description of the political landscape and his position in it is wonderful. I mean, it's one picture is worth so many words.
Yeah, he put that up on Twitter. I mean, do you personally use Twitter?
No, I don't use Twitter. I don't use any social network.
I would love to have you part of Twitter, just to comment once in a while. It would be amazing. How can we get you onto Twitter, Mr. Peterffy? How can we get you there?
Well, I purposely, that's why I don't want to be on Twitter, because I don't want to say things I later on regret.
Oh.
I don't want to be another Trump, right?
It's all right. We're all human. We all forgive each other. I mean, I've said silly things. We all say silly things, but maybe one day we can get you on there, because there's so many people that would benefit from your insights, and the good would outweigh the negative, I think, overall, for sure.
Yeah, maybe. Emmet, it was great fun.
Yes.
Good to see you.
Thanks.
And good luck to you, and you also, Matt. And continuing success, I wish you.
Thank you.
Right?
Thank you. Yeah.
Thank you so much.
Thanks. Thanks, Mr. Peterffy. Okay. We'll have you on again sometime if you're willing. Okay. Thanks.
Yeah.
Okay.
Bye.
Bye.